All right, let's look at some more questions that are going to be related to the manufacturing process. All right, and so the first question that we're going to be looking at deals with the three components of product cost, and that's going to be direct materials, direct labor, and manufacturing overhead. As we get more advanced in the topic, we will often have to calculate direct materials on a per unit basis. Direct labor is generally going to be provided, and usually manufacturing overhead will as well. There's plenty of difficulty in manufacturing overhead as it is. So we've got this company here, Wooten and McMahon Enterprises produces a product with the following per unit costs, and they give them to us. Okay. Now we've got a lot of information here already, and it can be distracting. So what do we want to do? We want to look down here at the very last thing in the question. What was the total operating income last year? What this tells us, by looking at the question before we go through everything and get all hung up on it, is what do we need to know? Unfortunately, in this particular question, we're going to need to know everything. Or we're going to use every single piece of information that we're provided. So what we have to do is we have to understand the way that an income statement works for a manufacturer. And for a manufacturer, it's going to look a lot like an income statement for a merchandiser. That is, we're going to have revenues at the top, followed by cost of goods sold, which is going to give us in a manufacturing environment when we subtract, let's see, so we're going to have, because we're looking for total operating income, not net income, operating income. So we're going to need our revenues, which is probably going to be sales. And we're going to need to subtract cost of goods sold from that. And that's going to give us something called gross margin. In a retail or merchandising environment, we would call that gross profit. And then what do? We then subtract out operating expenses from gross margin, and that's going to give us operating income. Now, I hadn't planned on writing all of this out here, so this is a little sloppy. But again, if we think about an income statement, sales minus cost of goods sold gives us gross margin. Subtract out our operating expenses, and we have operating income or loss, hopefully income. So, starting with revenues, we have 825 units that were sold at a cost of, at a sales price of $74.80. So what we're going to want to do here is just take 825 times 74.80 to get our revenues. And I have no idea what that is, so we'll bring the calculator over here. 825 units sold at a sales price of $74.80 each gives us $61,710 in revenues. Okay, so we're off to a pretty good start. But now the question becomes, what is our cost of goods sold? Well, we've got our components of our product cost here, so all we have to do is simply add these together. And so we've got $13 per unit for direct materials plus $8.80 for direct labor, and we've got $16.50 for all manufacturing overhead, because they've already calculated this on a per unit basis for us. That doesn't always happen. So we've got $38.30. So for cost of goods sold, right, we're going to need to say 825 times the amount on our calculator, 3830. So we've already got the 3830 on the calculator, so we can then just multiply that by 825, okay? And that's going to give us 31, I don't like cents on something like this, so we're going to go 31,598, and I'm going to put parentheses around that, okay? And so I'm going to subtract cost of goods sold from revenues. So let's see here, 61,710, that's my revenue, minus 31,598. If you just have to go 597 and 50 cents, go right ahead. That gives us gross margin of $30,112. But that is not what the question asked for. They also asked for operating expenses. Well, what we've done, selling and administrative expenses, have been totaled together as 24,200. So all we have to do is subtract that out. And we get operating income of $59.12, and that is going to be our answer. All right. One more question, and this question is going to deal with different types of costs that are incurred. And so when we look at total product costs, we could have actually very easily done this question first before we did this one here. But if we understand that we have costs that are incurred on a per unit basis, costs that are incurred on a batch, and then we also have costs per product line, and then we also have facility costs, right? All of these, well, some of these have all components of product cost: direct materials, direct labor, manufacturing overhead. Others may only be manufacturing overhead. But we want to understand that costs are incurred at different activity levels, all right? So we're dealing with a company called Martin Manufacturers, and we've got this data here as to how costs are incurred for their product. It says next year Martin Manufacturers plans to manufacture 25,000 units of product in batches of 250 units. So we know what a unit is. It's just something that we're going to ultimately sell. But a batch cost is whenever we come in and we say, okay, I'm going to make 250 units. And I have to get the machinery ready. We sometimes call these setup costs, okay, to get everything ready. And our setup costs or batch costs are $250 per batch. And then they were nice enough to just give us product and facility costs on a per year basis. And why do I say they're being nice? Because it says, let's see here. They changed the name of the business. Axis predicted manufacturing costs for next year. I'm going to change that because I don't know where they came up with that. We'll say Martin's. Martin's predicted manufacturing costs for next year is. Okay. So how do we do this? Pretty basic. We are going to probably need to get a calculator. We're going to have 25,000 units. And each one of those is going to incur a $10 cost. So we can take this $10 per unit. Well, we can do this any way we want to. We can say 25,000 times $10 per unit is going to give us unit costs of $250,000. All right. So for our batch costs, we have to do this a little bit differently, because we have to say, okay, we have a $250 batch charge or cost, and we can coincidentally make 250 units. So what we're going to do is we're going to take this 25,000 units and we're going to divide by 250, and then we're going to multiply that by the $250 per batch to get our total batch cost. Because what we're saying is we've got 25,000 units of production here, and we can make 250 units per batch. So how many batches are we going to need? Well, we need 100 batches. Okay, 25,000 divided by 250 units per batch. So we're going to need 100 batches, and then it just so happens that we're going to multiply that by 250. I wish they would have used a different number, but they didn't. So that gives us batch costs of 25,000 a year. And then with our product costs and our facility costs, we don't have to do anything. We can just plot those in there. So I'm going to start over on the calculator. We've got $250,000 in product cost at the unit level, plus $25,000 in batch activity level costs. Let's see here, plus $5,000 in product costs, or product line costs would be a better way to put that, and then facility cost of $25,000. Going to give us a grand total of $305,000. And the reason that we look at this type of information is because we kind of want this cost here, the unit level cost, to be the highest cost. We want low fixed costs and high variable costs, right? Because we don't so much care about this 305,000 here, because 275,000 of it is essentially a variable cost. These batch costs are variable in nature because they're based on production, right? Our product cost and our facility cost, these are going to be part of fixed factory overhead, and we don't like those kinds of costs. Fortunately, in our example, they only total 30,000, which is less than 10% of the total amount. So food for thought there. All right, that's it for this video.